Hi there, today we're going to be talking about global market influences, so the last dot point in influences, and considering the impact that the global market can have on a business, particularly a domestic business here in Australia, such as Qantas, for example. Okay, so why is it important? The fact globalisation has meant that businesses are now interacting more on the global stage, but that means that they need to strongly consider factors such as, what is the global economic outlook, what is the cost of funds in another country in terms of interest rates, and how available are those is that capital in other countries. Not all businesses in Australia are going to be interacting with the global market. Generally, it would be those larger businesses or businesses that have a export base or need to import some key materials. So we're really thinking about, if it's a key influence on a business, is what's the global economy doing? What's the cost of funds in another country? And in fact, can we access capital? So can we access money, i.e. debt, from another country at a lower cost than we can here? But we must consider the exchange rate when doing that. And also, how available is that capital? Is it easy to go and borrow money overseas? Indeed, is it easy to issue equity overseas? And that's what the three things we'll be exploring in this video. Firstly, economic outlook. If you're an Australian business who's considering doing business overseas, or you interact with other businesses overseas, it's really important to have a good understanding about, what is happening globally from an economic perspective. As I said before, a lot of Australian firms do trade globally, so therefore it's imperative that they're aware of those factors. For example, as the slide there says, if there's a downturn in the global economic outlook, so it's projected that going forward the global economy is going to be not growing as strongly, firms may not be able to sell as many goods in the future. So it's imperative that they're looking ahead and thinking, what is happening globally in terms of the economy? Is global economic growth anticipated to increase or decrease? And therefore we need to factor that into our future thoughts. The next important point is that the financial managers need to be aware of the financial health of the world economy, because that's then going to come back to impact the business in terms of potential competition and also financial decisions, which flows into interest rates and availability of funds. So here's just an extract from the IMF. It's a couple of years old now, but this was a projection they gave for the economic outlook globally in 2016 and heading into 2017. So they said, economic growth was projected to slow in 2016 before a bit of a recovery in 2017. So these are the types of things that financial managers would be looking at in terms of economic outlook to consider for the business, and which would help them to make key decisions internally. The second major factor and consideration is the availability of funds. How easy is it to actually be able to access funds globally, i.e. outside Australia? Again, with globalisation, it's generally easier to access funds now than it was 10, 20 years ago, but it can often be fraught with danger as well in terms of the markets you might be looking to borrow that money or to issue equity. Additionally, due to global events, access to capital may well become constrained. For example, during the global financial crisis, it became increasingly difficult to borrow overseas because banks did not want to lend globally, and that pushed a lot of businesses to needing to issue equity if they were public companies, because they couldn't access that debt finance. So the availability of funds or the availability of capital is crucial, and it's something that needs to be monitored consistently by financial managers of a business or within a business. Lastly, we've got interest rates and global interest rates. Again, with globalisation, it's increasingly easy to borrow funds from overseas, and often at a lower cost than you can domestically. Of course, that needs to be considered with the risks of borrowing from offshore and also the potential exchange rate differentials. Additionally, and it must be considered also what might impact those global interest rates. For example, as it says there, if the Australian economy is perceived to be a risky investment globally, Australian interest rates may well rise, and that could mean that you can borrow the funds elsewhere at a lower rate. If we have a look at this slide here, this is just showing the current cost of capital in other countries, or the rate that their central banks are lending at. You can see there in America at the moment, their current rates are half what they are here in Australia. But if you're seeking to borrow or take out a loan in the US, you'd need to factor in the exchange rate to bring that capital back to Australia. And you can see there, for example, in Indonesia, the current interest rate is 6.5%, so a lot higher than Australia. So you wouldn't really consider borrowing in a country such as that. But there are other countries which have significantly lower interest rates, and that may well be something that a company might consider to do to lower their cost of borrowing, is to borrow in another country, but they must always consider the exchange rate risk of changing that currency back to our domestic currency.